following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 4th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows for sure that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure that you and I, that we do everything in our power to have a wonderful Wednesday. You know, the easiest way to do that? It's to always remember that life happens for us, not to us. That's right, a little 2x4 exchange out there. It means that you can find the gift in every set of circumstance that life is going to throw at you. That's what happens. That's what happens in these markets each and every day, depending on the time frame that you trade on. But it's always circumstances that are being thrown to us, and it's always great to be able to find the gift in every set. I'm absolutely grateful for your presence here this morning. I'm here to serve you. Of course, you can always give me a call. Love to hear from you. 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way, you and I, we can be Lewis and Clark or something in Rhodes. We can, you can be the leader. We'll go exploring, looking for whatever it is that you might be looking for in any trade setup, and any currency pair, any commodity, any index, any ETF, any stock. This is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow futures. They're down about 56 points right now, trading out at 18,129. S&P futures off 6.5 points, trading out at 2,098. You've got the NASDAQ futures off about 12 points, trading at 44.44. King dollar on the move, up 262 ticks right now, trade out at 95.67. Gold is flat, trading at 12.04. Silver down a nickel at 16.24. Light sweet crude up a quarter right now, trading at about $50.75. Natural gas up 6 pennies, up 2.5% this morning, trade out at 277. Quick peek across the globe. Let's go see what we've got going on over in Europe this morning. You've got the DAX up 15 points. She's trading at 11,295 or so. The FTSE is back 6 points. If we take a look at the DAX, we identified yesterday inside the DAX for you. Number one, you had a 1.272 A to B equals CD pattern that completed. It completed with that little doji candle on March the 2nd. Yesterday, the high of that March 2nd date, by the way, is 11,455. The high of yesterday, 11,465. Okay, so you exceeded the prior day. We also exceeded the prior day's low. We also closed lower yesterday. You've got in this candle formation pattern right here inside of the DAX, you have a bearish engulfing. You have a three-river evening star pattern, and you have a key reversal session. And today, so long as you'd like to see it close lower than yesterday, doesn't need to, as long as it doesn't close above the DAX today, above 11,362.88, everything really remains in that checkout there. You'd like to see, now, when I say you'd like to see, this is for those people that would like to see a retracement in order to buy. So that's what I'm referring to here. At this stage, what the DAX has done, as of right now, let's say 9:10 in the morning, on whatever today is, March the 4th? Yeah, I think we're March the 4th out here. What the DAX has done, which has been a leader out there. If we take a look at the indices, it's given us a confirmed sell pattern as we speak right now. Now, where is that retracement? Where would that retracement, take us to? It's an excellent question out there. I would have to say the easiest way to look at that would just take a look at our last leg, our C to D leg out here, and retracement level of about 10,582, the 0.382 retracement. That'd be a nice retracement out there. Really, there would be nothing wrong. You'd have everybody, packing it in. But goodness gracious, 10,061 is not out of the question. That's just a 0.618 retracement. It'll just feel like the sky is falling. Does it have to happen? No. But do we have a completed pattern out here? We do. Do we have reversal signals? We do. Do we have multiple reversal signals? Does that even matter? No, not really. I was just telling you, one reversal signal is as good, and not necessarily as good as another. But in this case here, whether it's a key reversal session, whether it's a bearish engulfing, whether it's an evening star, it doesn't really matter. All that the sellers want to see, and I'm not suggesting that you go sell the DAX out here, but all what the sellers want to see is they want to see some additional follow through to the downside. If we take a look at the FTSE, I mentioned that's off right now about 8 points out here. Now, what's interesting about the FTSE is that it's testing the top of its consolidation box out here, which is at 68.75. It's trading at 68.81. So perhaps from the FTSE, whether it's today, whether it's tomorrow, you get an additional message about what the markets are trying to do. Now, if I pull this back, this is a daily chart that you're looking at for the FTSE. You can see that I'm using as the consolidation high, my line of demarcation, the May 22nd high. Again, that number 68.75.62. It's been a great line of demarcation out here because it has held so well. It has held so well up until the standpoint of the trading session on February the 17th when price got above it. Now, when you break out of a consolidation, I don't care whether it's diagonal, whether it's sideways, when you break out of a consolidation, bullish or bearish, what you really want to do is you want to see price come back to that level and test it. Test it and reject it to tell you that you've got a confirmed breakout. Test it and fail to tell you that that you have a failure out there and that price is not ready to break. Then with regard to where that failure is going to take you to, you've got to look for levels of support or resistance, depending on which type of a breakout or breakdown it is that you're looking at. So today, inside of the FTSE, tomorrow inside of the FTSE, now that today, because today is actually the first official, well, it's the second official test, because once it broke out on February 17th, it actually came back and tested that level on February 19th, and then it was up and away. Of course, it was up and away, and we had that little doji candle high from February 27th. That's really your resistance area at this stage, and that's out at 69.67.24. So if we see the FTSE close underneath 68.75 today, that's when Basil will be on the air, so that's at 11:30. Maybe he's able to look at that for you. Then what you can say is you've got a false breakout. If it rejects that level, then so far all that it has proven to us is that it is more of a real breakout than a false breakout. But anytime we see it close under 68.75, I'd say in the next couple of days, then that sets up a retracement. Where's that retracement going to take us to if it occurs? I'd say 67.21 becomes a nice area. 65.59 becomes an area. Those will become your targets to be observing and to be watching. And of course, oops, don't do that. The reason that we're taking a look at the DAX, the FTSE, the S&P. That was not the chart that I wanted to show you. Where is it? Let's see if I can find it easily. I really ought to go ahead and clean this up and separate this page into about 3 or 4 of them. Make it a little bit easier for you. Make it easier for me. Oh, come on. Show up on here, would you? Show up. It's here. It's probably there. It's right in front of my eyes. Good Lord. Could it get any bigger? Here's the chart for the DAX. The DAX is up top. FTSE's in the center. S&P is at the bottom. And again, just simply you can see the directional correlations, the way that these markets move. And that's why it makes it fairly nice for us at 9 o'clock in the morning to take a look at the FTSE and the DAX just to get a feel for what they're doing for the day. Of course, who's the leader out there? That's right, it's you. It's you and me. We're the leaders, U.S., and so to a certain extent, it can say, hey, I don't care what's going on over there, but that's really not the way that it works. These markets here trade to a certain extent in tandem. So that's what's going on there. Let's go take a look at, go back here. I know what we want to go take a look at next. Let's go take a look at the currency pairs. So let's move over from the DAX and the FTSE into the currency pairs out here. Let's go take a look at the euro. We've been watching the euro. We have been suggesting that what the euro, this is a daily chart. I'm going to blow it up on my screen here a bit. So we have been suggesting that ever since the euro got back into the candle, the swing point of January 26th, that there was a pretty good chance that the low will be tested. Well, that's low is at 1.109. We are moving down to that level. We have not gotten down to that area. We've been down to 1.1115, and so it does appear that that bottom is going to get tested. Of course, that is one of the elements that is putting the price strength into the U.S. dollar index. If we see it close below 1.1097, you will see the U.S. dollar index move higher, probably much, much higher, because what we're likely to see is the euro move lower. Much, much lower. In fact, if we take a look at retracement levels, where the euro is trading at right now is actually just slightly below its 0.618 retracement level, which is at looks like 1.122 out here. So we're already below it. If price takes out the daily swing point, what it actually sets up is a move down to 99 cents, 0.9905 to be exact out there. And that's the retracement coming off of the low from back in 2000. That's the October 2000 low all the way to the high that we saw out here right around April in 2008 and July of 2008 as well. So key level of support being tested. Now on the daily chart, when I say key level, it's nothing more than a swing point. It's not a reversal candle of any stretch of anyone's imagination. Well, the three candles out here qualifies as a three-river morning star. We took a look at the evening star when we looked at the DAX, and here's one that will qualify as the morning star. So it is a pretty good level of support from where the bulls are hanging out. We'll see if that area holds. Now, if this level fails, it'll be interesting to see what happens to gold, because if we take a look at gold, and the reason that I say that, and I wish I could produce a chart for you. I know that Z in the Den is there's something that he takes. He's got access to one of the charting services that goes ahead and prices gold in euro terms. Obviously, Tom has got that with inside his Bloomberg, and I would have to do manual calculations. I got enough calculations going on than to have to deal with that. But the reason that I say that is because when we go take a look at Goldilocks, let's go do that right now. We'll go back to the pound and so forth. What we know about gold, as we pull this off to the side, is gold's in this descending price channel out here, clearly in a descending price channel. Gold, the full moon comes in, I think, is tomorrow. Yeah, I think it's tomorrow. Tomorrow or the next. I think it's tomorrow. Because Wednesday, yeah. I believe it's tomorrow. So we're going to watch what happens tomorrow and Friday inside gold because of the initiation move that typically takes place on a full moon. Why, I don't know, but I do know that it does. And that means that you know that it does too now. But the reason that I say that is because I believe that what really began the breakout inside of gold had more to do with what was going on in the euro currency pair, gold priced in euros. And it was at that 1,000 euro area where there was a large consolidation. And once gold broke above that level, then that continued to move things up. So I don't know exactly where we're priced in euros right now, but I imagine it's still well above. I don't know if it's well above, but it's certainly, I think that it's above the 1,000 area. If we were to get below that, which you'd need to see a rejection, you would need to see a rejection of these lows here in the euro. That could start a real big move to the downside inside of Goldilocks. So maybe it's not just the initiation of the full moon. Maybe it would be the euro as well. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go check out our futures market out here. Then we'll go back. We'll take a look at the currency pairs out here as well. But the euro is the one that was most important for us to take a look at. Not that they're not all important; they are. But let's go take a look at the Dow. Let's spend this next few minutes here looking at the Dow. And let's look at it on multiple time frames. So, if we take a look at our 30-minute chart out here, so we'll go with 30, 120, 300, and the daily chart. When the Dow, If you caught yesterday's show, one of the things that we looked at on yesterday's show were those patterns that are associated, have been associated with most every major top, at least going back into the 1920s. Not every single one, but most major tops, whether it be on a daily, weekly, or monthly. Sometimes the same pattern with price moving higher with less relative strength out there has been present on all three time frames. Doesn't need to be. In the case here of the Dow, just to give an example of that, we also had price. This is going into the highs when the Nasdaq Composite was making its high a few days ago. Come on, don't do that. I wish I had a. There we go. When it was making its high back here on March the 2nd, so just a few days ago out here, price inside the Dow had moved higher. Did it with less relative strength out there, and it had a nice little bearish dark cloud cover candle that had formed out here, and that basically at this stage marked the low. Now we had. If we take a look at moves. Moves came. Well, made 100% move of a move yesterday. What that means, you're just simply coming back to a swing point. Your targets with regard to price projections, anything that you trade, you should always look at the swing points out there. Now, sometimes it's just a retracement retracement of a swing point. Sometimes price comes all the way back to that swing point. When it comes all the way back, we refer to that as a 100% move of a move. That just means you come back to that area. Oftentimes, it acts as support. Well, if we just simply put a horizontal line, this is nothing more than a 30-minute chart across our screen out here. We'll see that's the blue line right now going across my screen. You can see that prices come back to this level and it is held. So we know right now today, with regard to bullish or bearish, at least reading the message of the markets, that if this is our line, you know, picture that we're in a battle here, a battle between the bulls and the bears, and you're taking a look at the front line, you're taking a look at the lines in the sand, you're taking a look at lines that if they're run over, then the troops start running to the next area. And where would that next area be? Well, you start looking at the swing points again. So this level here inside of the Dow futures, which is right around 18,120, and what I like to do is just say, hey, why do we have to use 18,120? Let's just use our TAS market profile low out here on the 30-minute chart, which is 18,125. So I like that. And I like that because that level there right now, that is actually set up as in a bullish formation. Set up in a bullish formation because we've got that point of control, the light blue line, closer to the support level, the lower end of the box. So that says that the buyers ought to have some control. Of course, their control runs out at about the 18,147 level. So any close below 18,125 on a half-hour basis says that price moves down to the next level. So that's what the 30-minute chart is communicating to us. That's what it's communicating to me, at least. If we go take a look at the 120-minute chart here for the Dow, if we take a look at it, it had been in a descending price channel. It was in that descending price channel until 10 o'clock in the morning. 10 o'clock in the morning when it broke through that on March the 2nd. So remember, we were taking a look at the 30-minute chart here on March 2nd. Once you saw price break above that, that was communicating to you not to be short the Dow futures. Now what we have seen, so when we take a look at horizontal levels of support and we take a look at breakout areas, remember I say, you know, you like to see breakouts come back to a level of where it broke out and tested. Well, now what we see is yesterday as price was moving down. How this works, I don't know. I just know that it does. And when we take a look at price moving down to the 12 noon time frame, where did the body of the candle actually stop? It stopped right at the top of that descending price channel that price had broken out of. We can see right now as well that that level still continues to act as an area of support. Now, it's not a very wide price channel that was formed out there, but nonetheless, that descending tops, whatever it is you want to take a look at it, has held as support. So if we see a close below that horizontal level, what was it, 18,125, something like that, inside the Dow futures, and we see price move into we see price move into the descending price channel, what it says is price ought to come down and test the bottom of that channel, right around, let's say, 18,050, 60, somewhere right around there. It just depends on what time of the day that level would be hit. So that's the message of the 2-hour chart out there, and take a look at the Dow futures. Well, I'm going to go to the daily chart out here because I only have about 15 seconds, so I'll have to skip. We'll have to skip the 3-hour, the 5-hour energy chart. What we know here about the Dow futures, likely had made that fifth leg, that Chapman wave count E to the upside. Right now, this says that actually on the daily chart, more likely the sellers that are in control and support inside the Dow futures would be around 17,928. So if any of those levels of support fail, I'd have to say the number to be watching is 17,928. This is Steve with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 74 points, trade out at 18,128. S&P down 9 at 2,098. Composite off 18 at 49.61. Russell 2,000 down about 5 points at 12.29. DAX up 13. FTSE is flat. Gold is flat. Silver's down 3 pennies. Light sweet crude is up 29 cents. Leading the charge to the upside, Auto Home, ATHM, up a nice 15% this morning, up $6 and change. Wayfair Inc. up 19%, up about $5. Ambarella Inc. up $3, up 4.5%. Tesla's up $1.17. Delphi Automotive up $1.35. Amazon up 2. GoPro up $1.45. American Eagle Outfitters up 7.5%, up 97 cents. To the downside, Bob Evans. Bob Evans is struggling big time this morning, off nearly 20%, down $11. Trinet Group up 15%, down 6. Viva Las Vegas, VEEV, that's down 18% off $5.80. Wind Resorts down about $2.50. Artesian Partners down 5% off $2.50. Okay, so let's go check in on. So what do we want to? Oh, I know what I want to check in on.
some questions. Yesterday I talked about planetary index dates, and so I got a couple of emails asking if I would expand upon that a bit. And so my response was, yeah, I'll do that during the bottom of the hour. During the first show. So let me do that here. Let me. So what I was referring to yesterday, and let me just step back just a moment, because maybe you didn't even hear yesterday's show. So let me step back. Uno momento, por favor. Right here. Okay. So what I was alluding to yesterday, because there was a question. Hey, is there was there anything going on up in the skies, meaning celestial patterns, things of that sort, to be paying attention to for the month of March? And what I did was I suggested, well, there were a couple things. Number one, today, Wednesday, you've got Venus, which is in conjunction of Uranus. Now, those are referred to as the 0.618 planets out there, because it takes 225 days in order for that orbit to take place. If you take 225, divide by 365, the interesting thing is you're going to get 0.618 out there. So, you like to see other patterns that are completing at that same point in time inside of the market for it to have any kind of a impact out there. So that was one of the elements that was taking place. Other elements that were taking place that I had indicated was that we had a set of planetary index data. Now, this is work that was originally done by Larry Pesavento, Dr. Ruth Miller, may have been one or two other people that were involved with that work. And it's all based upon the ephemeris. Now, I'll hold up a copy. I don't know whether or not they'll be able to see that, but it's all based, my work, Larry's work, and so forth, all based on this book right here, The New American Ephemeris. So those of you that want to buy it, it's like, good, he sees it. It's like, I don't know, how much was this book? 20, 30 bucks, something like that? It wasn't that much. A great book out here. If you were to order it, it doesn't tell me. I can tell you where to order it from. Starcrafts Publishing. So you can Google that, or if you send me an email, I'll send you the number. If you want to have it. It's a great book to have in your toolbox out here. Now you want to get the one that's called The New American Ephemeris, 2007 to 2020. Now, what I did was I took the work that those guys did by hand, and I said I would like to automate it from the standpoint of being able to see, easily be able to plant any type of planetary aspect or any type of lunar aspect. As long as I had it digitally, I wanted to be able to go ahead and place it on a chart and be able to take a look at it to see if there was some type of consistent pattern. Was there something that, for the most part, others weren't looking at, for us to be able to? And I first started off by taking a look to see if I could find something that would give, I have a newsletter service called Mastering Probability. The whole idea was to try to find something that gave us a higher probability and odds. Well, one of the first pieces of work that I did was in trying to identify the original work of Larry and Dr. Ruth Miller, which was a planetary index date. So I'll switch over. So let me give you this right here. Let me switch to this chart. Slideshow from current slide. So there we go. Here is for the month of March. So by day, and I include this in my newsletter each day. By day, it identifies the number of planetary aspects that occur. Inside this book here, I'll hold this up once again. What it's looking at is the bottom section here, which is called the daily aspectarian. The daily aspectarian helps you identify both major and minor minor aspects that are occurring, angular aspects in essence that are occurring between planets. And the idea is that if you have a few number or a very large number, you're outside of that bell curve, that's when you've got some type of anomaly that seems to have an impact on what takes place in the markets out there. Many times they're just short-lived, meaning they last for 3, 4, 5 days. Sometimes it's longer than that. I was not able to find any kind of consistency out here. Well, tomorrow on Thursday, the original work, that happens to be this third column, the center column out here, because you see the daily aspectarian out here, when the work was originally done, it didn't have planets like, where is it? Didn't have Vesta. It didn't have Chiron. There were a couple of others. So now if you take a look at the work, if you were to use the original work and not adjust it, then you wouldn't really be able to, match up eggs with eggs or oranges with oranges or whatever that might be. What I can tell you is that the original work that Larry did, and he's on today, right? It's Wednesday, yeah, so he's on today. Maybe he'll cover this as well. That tomorrow is a 15 on the original work, a 15 15 planetary aspect day. And then the following day, on March the 6th, on Friday, it's a 3. So we've got that little cluster right there. You know, on the new work that I've done, when I say the new work, so I took the data from this ephemeris, and I decided that I wanted a lot of data. So I decided to get 300 years worth of data. 300 years worth of data. So I've got the data going out to, I don't remember, I went to 1800 to 2100. I figured that was pretty good. And so I've got all these data points all electronically mapped, if you will. And I went ahead and I did the distribution of the number of points that occurred. And I went ahead and took one step further. This is all based on ephemeris time. So about right now, a 5-hour time zone difference from where we're at here on the East Coast. And then I went ahead and, because this only looks at ephemeris time and the number of aspects that occur within a 24-hour period of time. I figured, hey, what the heck? I'm on Eastern Standard Time out here. Why don't I just take a look at that 24-hour period of time out there? And so that's what these 4 different columns represent. The point is this. Here's the distribution table. The point is this, and that is that oftentimes these areas, these dates, and you've got this little window out there, act as identifiers for where markets make turns out here. And so hopefully that helps to explain a little bit further what I was referring to. If you'd really like to know more about it, then, you know, come on over, sign up for Mastering Probability. You can test drive that for 30 days. It's got access to, like, I don't know, 30 hours or so worth of other educational resources where I talk about the New American Ephemeris and in all the studies in great detail out there. So give that a shot if that's something that you are interested in taking a look at. So I hope that answers your question. Okay, so now let's go back to the markets out here. Dow's off 125, S&P down 15 points right now. Russell's off 8. Let's go back to the currency pair. So we took a look at the euro. The euro is, you know, trying to get down and test that 110 area. So far, the low 1.110. Let's take a look at the Great British Pound. Great British Pound is the currency pair that gave us the best breakout level right now, and its retracement from the low on January 23rd to the high that was put out here on February 6th. It now is the body of the candle. Price is trading right at the 1.532 level. I mean, when I say right at it, I mean right at it. Now, if this level fails, does that mean that there's a breakout failure or anything? No, it does not. It just means the price is likely to go ahead and pull back into the 0.618 retracement level. Now, that's a daily chart that we're looking at. If 0.382 holds, what it could be set up as a huge A to B equals CD to the upside. And we won't know until we see some kind of reversal signal. If we don't see any kind of reversal candle, pretty good chance that price is going to move lower. If I look at a shorter term chart, let me put up, let's just see what happens on a 30-minute chart. Because on the daily chart, what I can tell you is we're not seeing any kind of A to B equals CD down pattern. But on a shorter term chart, we most certainly are. Now, what I said whoa about, did I say whoa? Is this candle that's forming here right now. This candle session does not complete until 9, I said 30 minutes out here, right? 9, should be 9. Let me see here, 8:30 to 9, so 9:30. It's 9:43. Oh, that's because I've got a 15-minute delay on it. No wonder. So I've got about 2 more minutes here. But it's trying to complete a hammer candle as we speak right now on the 30-minute chart as price is trying to hold that 0.382 level. So as Colonel Klink would say, very, very interesting out here as we take a look at that. Now the real key is if that is a hammer candle, is there an A to B equals CD down pattern on the short-term chart that is forming out here. So let's take a look at that. That gives us some type of indication either as to whether this level is going to hold or whether, and also if it does form that hammer candle out there. Now the 1-to-1 A to B equals CD is a little bit further down, 1.52. That's off of the highs out here. Yeah, I don't really think I can come up with anything else. It would just be some shorter-term A to B equals CD down patterns out here. We can look at those too. Let me just see. Here's the shorter one. So this one, I don't know if this one is actually even going to form out here. Let's see. That probably looks to me like lower price. Yeah, so no A to B equals CD down pattern. Too bad. You'd like to see one of those when you see a candle come into a reversal area. Nonetheless, on the 30-minute chart, what this is telling us, and so that was let me explode it up just a bit out here now that session officially ended. It ended 15 minutes ago. It's just I've got a delay. So that's a hammer candle. So in the case of the Great British Pound, that's the cool thing, is because if the low fails inside of the Great British Pound now, which is 1.5305, if we see it close below that, that gives me a signal that price is going to move down towards that 0.618 retracement level. At this 0.382 level would likely fail out here. Interestingly enough, there was another hammer candle that popped up on our screen right here at 6:30 this morning. This green candle right here, and that level was tested. So that level was tested, and there was another hammer candle. So whoever is in here buying, what this is telling us is that the bulls are really trying to hold this 0.382 retracement level, at least when it comes to the 30-minute time frame charts out there. So that's what's going on inside of the Great British Pound. Let's go take a look at some of these stocks here that are moving and grooving. Let's take a look at Auto Home, ATHM, up a nice almost 19% here this morning, out with numbers. So Auto Home is a Chinese company because this is all in RMB, RMB. But the revenue is almost doubled out there. No, its earnings per share nearly doubled. Net income doubled. And revenues, 380, very close to that, but the revenues doubled as well. So let's take a look at ATHM. Looks like this thing is not anywhere near its highs out here, and gapping up this morning. Let's see what this is trying to trade into. What does this have? So it's got an area of high volume highs out here in the August 2014 level of 57.93, and I haven't seen where this thing really has fallen apart much. It's trading right back to this little supply-ish type line from September 2014, but I don't think anybody should be too worried about that. It looks like what this is going to try to do is at least get back up into its most recent set of swing points between October 31st and November 3rd. That's in the 53 to $50-ish area right now at 45.58. That ticker symbol is ATHM. If we look at Wayfair Inc., W is a ticker symbol out here, up 18%, out with numbers as well. I see that they have revenues of $408 million versus $295, so a nice beat there. What's that? 300 to 400, about a 35% or so increase in the top line. However, they widened their loss. Went from 22 cents last year to 73 cents. Nonetheless, this thing has gapped up, so and this is an IPO. Okay, so here's an IPO. This went from, this was IPO'd on October the 2nd, had made a high of 39.43, got all the way down to the trading session on December 12th, 16.74, quite a decent haircut out there. Formed a little hammer candle out here. You can take a look at some hammer candles at these lows. This equity has a nice hammer candle on December 2nd, and then price pulled down into that hammer candle right back here on January 29th, formed another hammer. So what this was telling you is the institutions, whoever it is, they can't hide. You see, the message of the markets, which is what we like to look at, the message of the markets, the responsibility of buyers and sellers is just one thing. They have to go out there and they've got to form signs. And it's really just up to you and I to be able to read those signs. They do that in the form of Japanese candlestick charting. It is the coolest thing, especially when you learn how to apply that to other patterns that you trade. In fact, if you don't do that, if you're focused, if you're working on your education, with regard, because you want to really master these markets, you want to be able to make your own financial decisions, and you're not spending your time understanding the language of the markets, stop doing what you're doing right now. I don't care whether you learn it from me or you learn it from wherever you're going to learn it from, but by gosh, go do that. That is the most important thing that you could do, is to understand the candle formations that you're supposed to use for trading out there. And there's all kinds of great free material. There's all kinds of great lousy free material, so be really careful. If you really want to learn them, send an email to me. Sign up for my course, because I will teach you exactly what it is that you need to know in the shortest period of time. This is Steve Rhodes. This is TFNN. We've got the Dow off 140, S&P down 15. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 145 right now. S&P is down 16. Composites up 36. Russell 2000 down 9. Everything's down about 0.8% out there. Got an email request to go take a look at natural gas. So let's go take a look at natural gas. Right now it's up 3 pennies, trading out at 2.75. We take a look at natural gas. Here's what we do know at this stage here. Let's take a look at our market profiles. We can see that the price is broken above the level of support. That would say that natural gas could make a move up to about 282 out here. You know, I'm of the opinion that natural gas is doing nothing more than following the analog pattern and when it follows that analog pattern, it says we ought to pay attention to it. So you might be saying, well, what the heck is that, Steve? Well, if we take a look at that analog pattern, this is natural gas seasonal cycle over the course of the last 11 years out here. And what you'll see is that from the beginning of the year, price typically makes a low. This low comes in right around the middle of February. Specifically comes right in around the February 14th type time frame. Has a nice big spike up and then continues to move down. Now, it actually moves down and it forms a low right here. See where my little cursor is? No way for me to really expand this out. Makes a little low, and then it goes ahead and bounces. Well, coincidentally, or if not coincidentally, that little low out there is March the 4th. So it bounces, looks like just for about, you know, a day or two out here, and then it resumes its move back down to the bottom. So if you take a look, if you can kind of, you know, focus in on that, take a look at the current pattern. It's really what it is that we see that's taking place. If you come back into, you know, the earlier part of the year out here into January, there's your move lower. And so it's really doing what the seasonal cycle says. Now, does it have to follow this seasonal cycle pattern? Absolutely not. It doesn't have to. I just know that it is for the moment. And that then says that with regard to natural gas, if you're playing natural gas, you really need to be a trader. And I mean kind of like a intraday type of a trader out here, because it doesn't make its next real significant bottom until April. Hey, folks, it is Wonderful Wednesday. Thanks so much for starting your day with us. Have a great day. Look forward to seeing you in a few or tomorrow morning. Take care, folks.